Good morning, good morning, good morning. Alrighty, should we just jump into it? How's it going, Wish? Today, instead of being on the starting stream screen, we're just going to jump right into it as I set up the charts. So that way, I can talk to you guys while we do things. So, let me know what you guys want to talk about today. But I kind of have a few things I want to talk about. Let's turn down the freaking music. Good times to come. I think most of the bad is behind us, but our rules at Mango don't allow us to say that, right? We can't say that. We can't think that. We can't feel that. We can't fully put on positions based on that. Today, however, I'm going to be showing you guys some bullish angles, right? Because I've been bearish now for enough time. I don't want to depress you guys all that much. I want you guys to be looking ahead now. That being said, there are two sides to the coin. I want to focus on a few things that I noticed on this weekly close. Important things that we cannot ignore. We also were having a great discussion a brainstorming discussion in the Seed chat. For those of you guys who are in our private Seed Discord, in the Seed program, Vishal, try to read through that conversation that we had this weekend. It's hard to explain everything on this live, so it'll be helpful for you guys to get an idea of how to position. Because remember, it was these conversations that helped us get in at $17K to $19,000 Bitcoin last time, right? Last cycle, or rather, this most recent cycle. Okay, let me try to get the chat in my screen. Should we assume that today's volume is low like the weekends due to stock market? Especially at your level, Sai, I wouldn't be watching volume. Watch what price does on a weekly candle closing basis. The daily closes could have noise, but worth watching anyways for educational purposes. And there is some edge to be had on the low time frames in regards to trading. If you are looking to paper trade, like some of the seedlings have suggested you do, like to begin your journey learning, there's some really good. You know what? Let's just jump right into it. Actually, like there's a trade right here, depending on how Bitcoin shapes itself. Right, if we close above the zone somewhere around 71,000, 72,000, we can look for a $10,000 move to $80,000. If, however, we close underneath, let's say 66 to 65, I think we retest these lows over here at around 58. So you guys might be saying, oh, Sean, you're saying it could go up or it could go down. What the hell's the point? Well, guess what? That's exactly what trading is. That's what markets are. They could go up or they could go down at any point in time. Your job as a trader is not to forecast exactly what price is going to do at every single moment. Your job is to figure out, at this moment, at this particular time, I have a high probability chance of being right on where I think price is going. Okay? That's what your job is, guys. I want you guys to understand this. Trading, okay, and rather even investing for that matter, is not about knowing exactly what price is going to do at every single moment. It's about knowing that, hey, at this price point, at this juncture, at this time, at this moment, I have a very good chance of being right. Your job is to sit on your ass until those moments come. Not be wanting to know everything all the time. Be okay saying, I don't effing know. I don't effing know. This right here, guys, is an equal opportunity triangle. It's an equal opportunity for the bulls and equal opportunity for the bears, depending on which side it breaks. That being said, if you want to add a little bit edge onto this triangle, you have to look at the prevailing trend, and the prevailing trend is down. So the edge right now on this equal opportunity triangle lies in the direction of the bears. That being said, because they have that edge, if price does break up to the upside, you'll see an explosive move, like a quicker move to 82k. It's not going to be the same speed as the move towards the downside. That doesn't mean that the bulls are back, etc. We have to talk about all of that, but we are seeing some really good signs. XRP2, great pickup over here on the zone that we marked out like a week and a half ago. Krisha's zone lined up with this as well, right? So lots of confluence. So they're also lined up with our bounce trade that we took on XRP based off the hype chart. And now we are beginning to see on the lower time frames, XRP put in something very interesting that we will come back to. Before I continue, because we have a lot to go through, any questions? We're going to be going through XRP, we're going to be going through Bitcoin, we're going to be going through, I want to talk about Palantir today. We've been calling out Palantir for like a month now in the Discord chat, and we have some really good updates. The Oracle trade that I posted too is going really well. I think it has way more to go. A lot of great things happening on the charts. So we're going to start off with the dashboard. What's the dashboard saying? Switch on over to the crypto side of things. Then we'll look at Tradfi too, but not just yet. Hey, how's it going, Julian? How's it going? Hey, how's it going, man? Cardano, of course. I actually asked about you in the last live stream. You weren't here. I'm like, hey guys, we're looking at Cardano and Harshit isn't here. He's gonna miss this. So yeah, if you do have time, we look at Cardano again today. Cardano has been interesting as well. Here's what's interesting on the crypto side of things. Okay, the lower time frames are beginning to show some color. And when I say color, I'm talking about the color analysis video over here. This was initially just red, just bleeding, right? We're beginning to see things flip to green, to gray. Neutral is gray. Watch the 4-hour and the 12-hour time frames, guys, and you don't need to over analyze things at this point. You're just looking to see how often things flip from red to green and how long they stay that way. You'll get an idea of the market beginning to change. You'll get an idea of equilibrium beginning to set in. On the daily time frame, things are mostly still red. Yeah, you have a few longs coming in because of these recent bounces we've seen on a few altcoins. Keep an eye on those coins who are bouncing hard, right? That will give you an idea of where to be positioning when things do turn. We're not there yet. The 2-day is literally red throughout for the most part. Hype is still looking good. Yeah. The 4-day, red, right? Everything's red. You can just look at the right-hand corner over here, market-wide trend and market-wide volatility not sitting where you want it to be. Weekly is also looking red, right? So this is telling you guys that the trend is not in your favor. But does that mean that we don't have some long-term support opportunities coming up? When I say support opportunity, I'm talking about long-term trend may be giving us some trend support levels, right? And if you do look at the weekly chart, right here, we just closed a weekly candle, and the last 2 weekly candles, guys, have respected that 200 exponential moving average. Okay, the market literally defended Bitcoin just enough to hold above that 200 exponential moving average, and doing that tells us 2 things. That the market is rejecting price underneath it. It's looking at price underneath the 200 exponential moving average as opportunity, as, hey, these are really good prices, and we aren't willing to miss up or lose out on those bids, right? So the market is not accepting price down there, right? We have 2 weekly candles that rejected price underneath that weekly 200 exponential moving average, front running that 200 moving average. That being said, if in the weeks to come, the market changes its mind or sell pressure overwhelms the buyers who are rejecting price over here, and we do see that weekly close, that is telling you that you're going to see that quick move down to around 58K. What does that line up with? That lines up with us seeing this equal opportunity triangle breaking down and testing these lows as well, which is lining up at around 58 to 59,000, right? So all of this may come together in the coming week, because remember, just because it looks like we might break soon, this could take some time. Okay, we may go like this, one more move to the upside and then down. That would line up with the end of the week. So be patient on these kind of triangles. Don't get too excited. Don't try to front run them, especially now. Okay, so let's go back to the weekly time frame. There's something more that I want you guys to keep an eye on over here. The 21 exponential moving average and the 55 exponential moving average over here have now crossed bearish, right? Now, this is a good and a bad thing. Usually when you see this kind of thing play out, right, what does end up happening is the 21 exponential moving average starts coming down aggressively to meet price, meet the 200 exponential moving average, meet the 200 moving average, and you start getting equilibrium between the moving averages. That being said, as soon as you start seeing the 21 EMA start living underneath all of those averages, now you have a trending market towards the downside. Now we get what I talked about, like, I think it was a month or two ago, or I'm forgetting when, but we talked about the 3-day cloud flipping red from green. And that was the first indication that, hey, we might be going into a prolonged bear market. And we don't want that, right? We want that to get undone. And this is another big sign that we may be going into that environment. That being said, this is what we're going to be doing over here, okay? We're going to be switching from the weekly to the mango time frame to the 4-day moving average. And what we're going to be doing is some simple basics, back to foundation, moving average analysis, okay? We're going to be looking at moving averages against each other, and we're going to be looking at price against the moving averages. And for the most part, right, all I want you guys to look at is these moving averages getting clumped up, okay? So for example, you guys can see all these moving averages, right? They're all clumped up over here. You have your green 55, your yellow 21 EMA, your purple 200 exponential, and your red 200 moving average. Typically, when you see something like this, right, that is an opportunity for the bulls. That is an opportunity for the bulls to actually, go back to the 4-day. That's an opportunity for the bulls to actually put in a potential V bottom reversal, provided they actually claim that clump up. If we see price move up to that clump of moving averages and start living above it, break above it, claim it, break above it, live above it, put a high low above it, that is an opportunity for all you momentum traders to say, oh shit, wait a minute, this ended up being one big trap on the higher time frames. We might actually see something like this. So that opportunity now exists at this juncture. What we don't want is that the 21 exponential moving average coming and living way underneath the 200 and the 200 moving average and the 200 exponential moving average. I'm going to show you guys examples of that, okay? Just eyeball it. You don't need to do anything too complex. Just eyeball price and rather just eyeball the moving averages. You guys can see that right over here, everything clumped up, right? Everything clumped up, right? And what did the bulls do? Bulls push price up, held it, push price up, held it, push price up. Once you start seeing that kind of activity, right, the bears start getting nervous. The bulls start getting excited. We don't have that just yet. This is what I'm talking about when I constantly tell you guys, wait for the moving averages to come into equilibrium with price and vice versa. Okay, let's go back to this. This, by the way, is an example of the complete opposite, where we lost the 21 and the green 55, found support on the 200 exponential average, and then once we lost those averages as well, price started trending aggressively. Look at when price started trending, guys. That 21 EMA lived underneath the yellow, okay? I'm not going to confuse you guys with numbers here. The yellow was beginning to live underneath the red and the purple, and then price started trending in that direction. We don't want that. I'm going to show you guys an example of when we avoided that right over here. If you guys do remember back during COVID, Vishal, you were probably, you were here, you probably remember this right here was an example of just that. We had the clump, right? We had the clump, all your moving averages together. Even though price was living underneath, we had the V bottom into the clump. The bulls recovered it, held, and then we start trending the other way. Okay, again, I'm going to go ahead, zoom out. You guys will see it over and over again, right? It's that simple. It's that simple. Yes, it's going to require patience. Yes, you may not be getting the exact bottom, but you can start your aggression when prices actually give you the signal. Okay, I'm going to mark out every single time. Over here. In fact, this entire area, you could have played it the same way. Get in, get out, right? Over here. And yeah, Bitcoin doesn't have too much price history. You can count this one as well because you don't have enough price history for the 200 exponential and the 200 moving average. You use the lower time frames only. And again, we have the same thing, opportunity for the same thing. Over here, the bulls have an opportunity to reclaim the zone. If they do, then that will line up with the potential V bottom. Until then, you don't look for that. Until then, you say, I am going to play this as a trend trader. I'm going to play this as Mango. Now, moving away from the moving averages, I know this can be a little bit more messy and convoluted for a lot of you guys, which is why we keep things very, very simple and use a very, very powerful indicator like the Mango dynamic that uses multiple things together, puts it all together, and keeps it simple for you guys, right? Well, that's what got us our massive trend trade all the way to $120,000 and also got us out right over here when we lost the bi-weekly Mango dynamic. Perfect retest, perfect move towards the downside. And I started off with showing you guys a potential bullish opportunity, but I want to reiterate and re-emphasize that as things stand, we are still living underneath the bi-weekly dynamic, and our rules just do not let us get overly bullish until we start claiming all of those levels back again. Now, we're not going to wait for the bi-weekly dynamic to be claimed, especially if we get that leg towards the downside. We're going to be looking for other things, but I just want to tell you guys that if you want to keep your edge over the long term, all you have to do is keep the trend on in your favor. We don't have that at the moment. We don't have the bi-week dynamic. We don't have the clump up situation that I just showed you guys. We don't have that trigger just yet. Moreover, if you go on over to your cloud, we have something that is a bit dangerous, but again, at the same time, lines up with the opportunity that I just highlighted to you guys in regards to the moving averages. If you guys remember, like around 4 weeks ago, time's flying, maybe it was 5 weeks ago, I don't know. How many? 1, 2, 3, 4, 5 weeks ago. Actually 6 weeks, right? Because we talked about it in this candle here. We said that we don't want Bitcoin closing underneath around $92,000 because that would potentially lead to Bitcoin opening inside the cloud, right? And we just did not want that. Let me go ahead and turn it off for a second. We put simply, we did not want Bitcoin closing into the cloud or opening inside the cloud. We got the worst candle. Bitcoin closed underneath $92,000, yes, but closed directly on that candle itself inside the cloud, right? The worst. And as you guys can see, the market respected the cloud. I'm going to zoom in for you guys. Right over there, tested the top of the cloud and made its way straight to the bottom of the cloud. That's the play. That's the Ichimoku play. You close inside the cloud, you look for a move all the way towards the bottom of the cloud. Boom! It happened so fast. The market respected it so fast. But the flip is also possible now, okay? If we can reclaim the cloud, we can see that move to the top of the cloud. It's that simple, right? You get that vacuum play. That being said, at the moment, we're living underneath the cloud, and this is not good. And I'm going to tell you guys why. If you turn on your Tenkin, your blue line, okay? At the moment, the Tenkin is sitting safe above the cloud. What we don't want is the Tenkin penetrating the cloud and closing underneath the cloud. Once we see that, that's going to be another indication of a trending market towards the downside. And we just have to look down and down and down after that. I know we don't want to, but it's what will keep us safe. If you guys see right over here, every time the Tenkin has closed underneath the cloud, price has just kept going, right? Over here too, price has kept going. Over here too, price has kept going. So Tenkin underneath the green cloud, guys, is effing bad. We don't want that. So the bulls have an opportunity to stop that from happening. Close into the cloud and then make its way up to the top of the cloud. The Tenkin is likely going to be fine. We may actually even flip this into a bullish situation where the cloud stays green, price breaks up above the cloud, we get a TK cross above the cloud again, because at the moment things aren't looking too good. We're about to get the bearish TK cross. I would say this is a cross, guys. The red Kijun should be underneath the blue Tenkin if you want to stay bullish, right? We want that deviation between the two of them to reestablish itself. We don't have that at the moment. So even though I'm presenting to you guys these bullish angles, none of them have triggered just yet. The only thing that we have going for us at the moment is the fact that on the weekly time frame, price is holding above the 200 exponential moving average, right? Now, longer term, buying around the 200 exponential moving average and the 200 moving average has not been a bad deal at all. In fact, it's been a really, really good deal. With a caveat, especially the 200 exponential moving average. I've had enough friends buy the 200 moving exponential average and then had to endure pain that they weren't willing to endure, and then they puked out their positions. Had they just held, though, they would have been fantastic, right? I'm going to go and show you. I remember this clearly. 3K. Everyone's eyes were on this 200 exponential moving average. Everyone, right? And you can see price broke underneath it, consolidated underneath it. Everyone thought that was the end of the world, looking towards $1,000 Bitcoin. Nope. We ended up putting in a bullish consolidation, closed above it, and went straight to like 14K before we had the COVID dump. And over here too, this was a much wider consolidation, a more volatile consolidation, but you cannot control market volatility. All you can control is your position sizing to keep your risk in control, right, in relation to the market volatility. So market volatility can come in all shapes. You can have a inverted head and shoulders that is really tight, that is really tight like this, right? Or you could have a inverted head and shoulders. What am I drawing? That is really wide like that, right? You can't control volatility, right? The moving averages are going to show you how volatile the price is related to in relation to price. So we had the same consolidation here and we had the same consolidation over here, but over here things were just far more volatile. And then we broke up and went through. Why am I saying all this? All I'm trying to say is you could be buying the 200 exponential moving average and then see price make a volatile move towards the downside and snap back just as aggressively. The same move that made towards the downside underneath the 200 exponential moving average, it'll likely snap back up to the exponential moving average again. But in that interim, you are likely going to puke out your position if you don't have the stomach or the position sizing, because sometimes all it takes is the right position sizing. And again, I implore you guys in the Mango C program, use your Mango risk management indicator, your Mango risk management tool sheet. It'll protect you, keep your mind safe, and rewatch the modules. The risk management module is 5.5 hours for a reason. It's literally my entire strategy and my entire mindset given to you guys on a platter. Watch it. Wolby says only professional analysis in here. Okay. Any questions before I move on? Okay. I'm going to take a sip of my drink. Now, we talked about how we don't want the Tenkin to live underneath the cloud. And at the moment, we are far away from that. But time flies, man. I can't believe it's been already 5 to 6 weeks since we lost the cloud. Like, time's going like this. So in no time, it's going to be another 12 weeks. And we have to keep an eye on this blue Tenkin over here. Something else that we already talked about, bi-weekly dynamic is also not looking good. We also don't have the 10 SMA, which has been our guiding light, going in our favor. there's more. And this is where we got to be careful. And this is where opportunity, in my opinion, arises. We may see an opportunity to buy Bitcoin at much lower prices, or we may see Bitcoin showing strength at this juncture by the virtue of not going down, right? I've been flagging this chart over here on Palantir for a while now. If you guys are in the private C chat, you guys know exactly what I'm talking about. In my opinion, this was the first big indication that the market is likely going to be seeing weakness. Palantir going sideways and then putting in that kind of consolidation. Hasn't fully broken down yet, but I've been watching this for a while, right? Like Palantir is there could be other assets out there that people are watching as a gauge for risk appetite. I've been watching Palantir for months now, and I was always uncomfortable with Bitcoin too, based on what Palantir is doing. But of course, Bitcoin is the highest risk gauge in the market, right? So Palantir doing what it was doing and Bitcoin also going sideways was just not sitting well with me. Of course, Bitcoin front ran the whole thing, and Bitcoin was faster than Palantir on the breakdown. But look, Palantir is now breaking down as well. It's beginning to follow the same kind of path. And as we see this, we're beginning to see other assets show weakness too on Tradfi. If Palantir loses this bi-weekly dynamic, and I want to go ahead and hide my drawings, show you guys how well this has respected the bi-weekly dynamic. If you were playing Tradfi, all you had to do was buy each test of the bi-weekly dynamic, and you would have made a shitload of money. In the same vein, though, we're about to lose it, right? If we can close, or not, we don't want it to happen, but if Palantir closes underneath the bi-weekly dynamic, I think this is coming down. Like, how low? Basic TA is going to have to tell me to look towards 45, right? But I don't think it comes down there. I think we test these lows here, right? Somewhere here. And maybe you can draw out this entire order block. But considering how clean this trend has been, you could actually go up all the way over here. But I wouldn't want to do that. That's like being too generous, and you may get wrecked, because if it breaks into the box, it's coming all the way. You know what we could do? Mark out this box and say it's going to break. And then we're going to mark out the middle of that box. That's going to be somewhere around 92. I'm going to do that. And I'm going to do this. Okay, yeah, there you go. So this zone is where I'd be looking to begin accumulation. But I'd honestly, personally, I'd be shit scared. I wouldn't, because I'm not all that bullish long term on these kind of assets to want to get greedy with it, right? So what I would personally do is I'd just be looking towards this zone over here, right? I'd wait. But that being said, Palantir coming down. You can also look at it on the dashboard too. Palantir flipped bearish 37 days ago. 37 days ago gave us the call. So you could have flipped bearish on all assets based on just this, okay? Just this. Of course, the dashboard gave you the call on Bitcoin way ahead of time. But let's say you wanted more confirmation. Palantir was the chart to be watching. You would have saved 25% on your spot positions on Palantir, if you had Palantir, that is. Or if you want to put on some leverage positions towards the downside, you would have made a shitload of money just following the daily call on Palantir right over here, right? Great gains 37 days ago. It doesn't end just there though, right? Like, if you go ahead and look at a few other assets, you can see SPY just flipped short as well. Okay, the reversal was only 2 days ago. You're beginning to see these guys follow. SPY is the general market, of course, but Palantir has been leading. Let's look at Nasdaq. Nasdaq has been leading SPY. Nasdaq flipped 11 days ago. Remember, Palantir, like almost 40 days ago, guys. These guys are just beginning to flip. The market is not feeling all that bullish right now. You can tell. What about Apple? What's Apple doing? Apple hasn't had its move just yet, and neutral across the board. We could be looking towards Apple as an opportunity. Like I said, Oracle too. We call this move, right? We are waiting for this to come all the way down to the bottom of the monthly dynamic, 3-month dynamic. That's a huge move. 60%. Okay. Being ahead of the market and being patient, guys, this is how you make your money. Just following what the market is doing, following the market hype is not how you make money. How's it going, Mark? How's it going? And guys, massive shout out to Mock for constantly, Mock and Maher, of course, Mock and Shanks, for constantly giving us these crazy updates on the dashboard. As you guys know, now we can filter the dashboard based on market sectors, basic materials, communications, consumer cyclicals, consumer defense, etc. And you get an idea, not an idea, you get a strong read on the trend of that sector. So you can focus all your attention on just that sector, right? If you see consumer defensives flipping long, you don't want to be in technology. You don't want to be in tech. You want to be in consumer defensives and pick assets from this list over here, right? So you're wondering, hey, what should I go into for the next few months or few weeks? Well, right here, the dashboard is telling you that the 36 stock picks in the consumer defensive section is long. Energy as well, doing great. You can go through the list over here, and it filters. The dashboard filters for you. So this is one of the most I think, honestly, I genuinely think the dashboard is the best product in all of crypto. It's the best product. There's nothing that beats this. I've tied my hair, man, today. I don't want it hitting my face. Do you want to see how long my hair's gotten? It's a mess. I can't see myself. Where am I? Yeah, it's a mess, man. Dude, it's a bear market. I can't afford a haircut. Haircut or Bitcoin? Pick. Okay. Let's talk XRP and what I really like about XRP, guys, is the way it reacted to the zone that we marked out, right? Really good pickup. Now, what we're looking for it to do now is clear the upper zone, this upper level of resistance coming in around 160 to around 175. The zone that you guys are looking for XRP to hold, though, is around $1.10 to $1.20. Now, that being said, there's more that's happening. We should switch on over to your daily. In fact, we can start off with we're going to take a step back, though, and talk about the trade that we took, where I said that I'm going to be looking to take profits along the 6-hour dynamic. Well, we have an update on that. The 6-hour dynamic was claimed very, very cleanly, close above it, push above, and then we tested the 12-hour dynamic, as you guys can see, right? Now, this is what we are looking for. Sorry, it's the day dynamic. This is what we're looking for XRP to claim. We're looking for it to claim the daily dynamic. Now, that can happen in one of two ways. It can either happen by XRP pushing through the zone that we just talked about, the upper zone, right, coming in again at $1.75 to $1.60, or it can play out in the way it has done with the 12-hour dynamic, where the 12-hour dynamic came down. We pushed above it, right? We pushed above it, tested a resistance level, and now we're holding it. Now, here's the thing. What we want to see is XRP hold this 12-hour dynamic, okay? If it does, that's going to be an ultra sign of strength, because usually the first claim of the 12-hour dynamic is lost, right? Once you claim it, price tends to come down, break underneath it, and maybe even test these lows here. If you don't see that, that's going to be a sign of strength, right? If we don't see something like that, and instead we start seeing XRP hold these levels over here and the 12-hour dynamic push price up, we're going to end up getting then on XRP is something like this. Let me draw it out for you guys. This is the structure you're going to get, right? With the 12-hour dynamic coming in and curling with price. So that's going to end up being a W-like consolidation, or you could call it an ascending triangle within the zone, where price basically gave you one opportunity at these lows over here and then puts in a higher low within it, right? You're going to get this triangle here, right? That's the shape it's going to take, and then we break up. If we do that, then your measured move is the width of the triangle. And then we'll be looking towards around $2.10, $2.20. Does that make sense? How's it going, Nick? Crazy to think we only have 7 to 8 months left of the bear. Marvin sad. How's it going, buddy? Look, a few other things I did want to talk about. Let's go on to the dashboard. XRP is long against Bitcoin on the 12 on the daily. It's actually outperforming Bitcoin on this consolidation, right? That's really, really interesting. And if you go on over to the dashboard too, right, you're going to see, actually, this is a mess. If you go on over to Bitcoin dominance, you're going to see Bitcoin dominance isn't doing all that well, considering it's a bear market, right? In a bear market, what do you see Bitcoin dominance do usually? Move to the upside, because people are leaving their altcoins and going on over to safer assets, right? So it doesn't matter whether they go pick USDT or not, right? They're still leaving altcoins, and they'd be leaving altcoins with more force than they'd be leaving Bitcoin. Now, this isn't telling you guys that we're going to altcoin season. What it might be telling you guys is that there's no more selling left to be done in altcoins, right? Because usually the behavior is that I'm going to reduce my risk. And when you're reducing risk and you have a bunch of assets, you're going to reduce your riskiest assets first, and you're going to sell them in that kind of proportion. But if you're seeing Bitcoin dominance go down during this kind of move, it could be one of two things. People are actually bullish on alts and buying alts, which I'm not feeling just yet. But the other option is just as bullish, in my opinion, is that people don't have any more risk to offload in the altcoin department. What it's telling you, when you have Bitcoin dominance go down in a bear market, it's potentially indicating that people are all out of alts to sell, right? They don't have any selling power left, so they're selling what they can, and they're selling their Bitcoin to de-risk. Does that make sense? Any good Tesla opportunities? Yeah, but it's not as good as what we're getting with Palantir. Tesla's still holding. Now, since you asked, I'm going to quickly talk about this. I'm like all over the place. But what I've been noticing about Tesla, right? It's good and bad that we're playing this on the 3-month chart, right? Because our Tesla opportunity, our Tesla trade is like years down the road. Like, I think Tesla could get to, like I said, multi-$1,000 share price, like per share. So we're looking at least $1,000 per share, but I think could get up to 3,500-ish per share. So we're playing for that. So that's a potential 10x from here, which is why we want to give it room to breathe. That being said, it's closed like multiple 3-month candles above this zone over here, and it's holding there, right? I'd want it to start moving to the upside quicker. From this point, draw some distance away from 400. I'm not all that comfortable over here with price because it's not a good buy opportunity unless you're like just nibbling at it, and it's like not even doing much for you, right? I'd like it lower at around 330, or I like it higher, right? Over here it's a bit difficult. That's Tesla's buy opportunity was like when I was screaming about Tesla during this phase here. I was like constantly telling you guys on Discord too, Tesla. I think you did take the opportunity, Marvin. I'm not sure about other folk. If Tesla owns robotics, it owns the labor force market cap. Yeah, I mean, I know I have some really controversial takes on this. That I cannot say out loud, so I'm not going to say it. All right, back to. Okay, I think we can stop right here. I don't want to overanalyze things. I can't talk. We can go take a quick look at just Dixie and do a good macro analysis. Yeah, this is looking like it wants to come down to dollar weakness. Let's get the 10-year. I have it right here. So the 10-year is going down, right? If the 10-year is going down, this is essentially indicating to me that the market is pricing in high productivity, and the market is also not buying into the debasement rate, right? If the market believed that there was debasement, you'd be seeing this going up, which is something I've been looking at, right? If you're seeing gold go up without yield curve control, because I don't think there's yield curve control going on at the moment, then if the debasement rate was true, you'd be seeing this chart go up actually, but it's going down. So the market is not pricing in any sort of inflation risk. Thank you. I'm not a seed member, says Marvin, but I have been around for years. But if you listen to the videos and stay tapped in, you get an insight to seed. Yeah, I honestly give away almost all of the information in here. Not all of it, but almost all of the information out here on the public videos. It's just that it's not as structured as it is in the seed program. So anyone who's willing to put in the actual time and effort on the daily videos like you have been, they get 99% of the value. So you don't need to buy anything, guys. Save your money as long as you have the time to put in the work. ETH, no one cares about ETH anymore. I do. I have a really good thesis on something pertaining to ETH that I will be actually writing down and presenting to you guys in the Mango Seed program in the Seed Clubhouse pretty soon. A really nice opportunity for really long-term play that I'm going to be putting on myself. So stay tuned for that. Okay, so how long have we been running? I think we can wrap up now. Yeah, I think this is good. I'll do another update on Wednesday. I hope you guys enjoyed this live stream. I'll do a quick recap. Remember, we're on the low time frames. We're seeing this equal opportunity triangle. If it does break to the upside, we're looking towards 82,000. If it breaks towards the downside, we're looking at around 58 to 59,000. Testing the lows over here lines up with what we're seeing on the higher time frames as well. But remember, this could take a few more days to play out. Would line up with the end of the week. Weekly charts on Bitcoin not looking the best at the moment, but there's opportunity for the bulls to flip this. Oh, Kush's birthday is coming up soon too, which means that would line up with another leg towards the downside. We don't want that, of course, but let's go quickly take a look at the cloud. Cloud is still green, but price underneath the cloud not looking good. We want the Tenkin to stay above the cloud for now. A-okay. Bulls have an opportunity to go ahead and flip the moving averages that we talked about right over here. Want the bulls to flip this entire juncture. If they do, that's going to signal a potential V-bottom recovery. Until we see that, though, we got to be defensive, got to be cautious. Do not try to catch a knife. You could see better prices on Bitcoin. Yeah, that's pretty much it. Keep it mango, guys. Keep it easy. Keep it stress-free. I'll see you guys on Wednesday. Ciao.